In the world of finance, where spells of knowledge pave the way to riches, one wizard rises above all. Welcome to The Wizard of Investment. Today, we're delving into a topic that's often asked, yet rarely addressed with clarity. Yes, you've guessed it. We're going to talk about how to invest £1,000. Remember, every spell of wisdom we share today could be the catalyst for your financial growth tomorrow. So make sure you watch till the very end. So let's unravel the mysteries of investing £1,000 together, right here, on The Wizard of Investment. Stay tuned, and let's embark on this journey to financial wizardry. Let the magic begin. If you have managed to save £1,000, you might want to know how to invest it. This could be a sensible move and is more likely to make your money grow than if you left it in a savings account paying a low rate of interest. Remember, you should always consider having an emergency fund before you start investing. In this video, we set out 1. Is £1,000 a good starting amount? 2. How to invest your first £1,000. 3. Investment options to consider for £1,000. 4. Should I invest £1,000 in Bitcoin? Can I start investing with £1,000? Yes, this is a good amount to start investing in assets such as shares, funds or bonds. But bear in mind that you may well need to keep your money tied up in these investments for at least 5 years to really benefit, and that it will be at risk from market downturns. This is why you should already have built up an emergency cash buffer of between 3 and 6 months worth of earnings before you start investing. You will need this money at hand for any unexpected, but important, expenses. For example, say your car packed in and you urgently needed a new one. If you had to dip into your investment account for the money, you might be defeating the purpose of investing in the first place, to earn big returns and make a real difference to your financial health. Instead, you can keep this emergency cash in an easy access savings account. We round up the best ones. Once you have this safety net of savings, investing £1,000 can be a good starting point to buy shares or funds. Capital at risk. All investments carry a varying degree of risk, and it's important you understand the nature of these. The value of your investments can go down as well as up, and you may get back less than you put in. Is £1,000 a good investment amount? Many people worry that they don't have enough money to invest, but there is no set amount needed to get the ball rolling. Amid high inflation, currently 10.4%, any lump sum of money held in savings accounts, which pay a fraction of the current inflation rate, will be losing value. An initial investment of £1,000 may well help you generate some decent returns. Some investment websites or companies have a minimum amount you will need to put down as a lump sum, which could be anything from £100 to £1,000, while others will consider those who can contribute a small sum of money, perhaps £25, every month. When you set up your investment, you have 3 payment options. 1. Invest the full £1,000 straight away as a lump sum. 2. Set up a direct debit to spread that investment out over time in smaller, regular chunks. 3. Put down some of the £1,000 as a lump sum and set up regular monthly contributions for the rest. Investing a large amount in one go carries the risk that the stock market, say, could crash soon after, wiping out the value of the assets you've bought, on paper at least. Of course, that also applies in reverse. The larger the sum you put down, the more you will gain on paper if the market surges. Regular investment limits your exposure to market movements, and you can also gain from pound cost averaging, where you get more units for your money when markets fall. Investing your first £1,000. When we see the word investment, many of us instinctively think of buying shares in individual companies listed on the stock market. This direct route is one way of getting into stock market investment, but there are other options. A popular approach is to buy into investment funds or trusts. These pool your money with that of other investors to buy a variety of stocks or other types of investment, such as commercial property or even gold. What to consider before you invest. Investing is not for everyone. Your decision on whether it is right for you will depend on a number of factors. Your current financial situation. If you were to leave that £1,000 in a savings account paying typical interest of 4.5% or less, at least that money would be guaranteed to grow, even if the current sky-high rate of inflation leaves the growth in your savings behind. When you invest, there is the potential for far greater returns, but there are no guarantees that your money will be safe. It is at the mercy of movements in the financial markets. Investing for at least 5 years, the minimum recommended period, and that increases your chances of riding out market downturns and potentially enjoying stronger returns. But again, you can't be sure that your investments won't lose value. So the tighter your budget, now and in the future, the more you need to ask yourself whether you could afford to lose some of that £1,000. If you couldn't, there is a case for steering clear of investing. Your risk level. Within this assessment, however, is your own tolerance for risk, which investment platforms take into account when selecting the assets that go into a ready-made investment portfolio. They will ask you to state the level of risk you are prepared to take, perhaps high, medium or low, and tailor your asset mix accordingly. The lower the risk, the lower the potential returns, but at least the chances of losing money are reduced, and that could make investment a more attractive option if you are on a budget. If you are more confident in your financial prospects, by contrast, you could take a higher risk option in the pursuit of higher returns. There are also self-select funds, usually aimed at more experienced investors, where you can make your own asset choices according to your objectives and appetite for risk. Your time frame. When might you need to get hold of the money you have locked away in investments? Even taking 5 years as the minimum for staying in the markets, some types of investment are more volatile than others and may be a bad idea if you know you are going to need the money in the relatively short term. But if you won't have to call on the money for years longer than that, or even decades, perhaps if you are looking to fund your retirement, you can usually afford to take more risk in the hope of a higher return. How can I invest £1,000 and make money? While no one can guarantee that an investment will be profitable, the best way to make money is to remain invested for at least 5 years because this increases the likelihood of strong returns. You should also consider spreading your risk by diversifying your investments, perhaps buying into different companies and industries, different countries, and different asset classes such as shares, bonds, property or commodities. This way, you will limit your exposure to any downturns in fortune in any one of these areas. While investing can give you a financial boost, your money is at risk. In other words, there is no guarantee that your investments will rise in value and leave you showing a profit. Best ways to invest £1,000. There is no one best way to invest £1,000. The most suitable strategy for you will depend on how much money you want to make, as well as your risk appetite and investment time frame. The following, though, are some of the options. 1. Choose a tax-efficient product. Holding your investments inside an ISA or a pensions product is a good way of protecting your money from tax. These are sometimes called a tax-efficient wrapper. ISAs. 1. Everyone can save or invest £20,000 a year in a cash or stocks and shares ISA, and money within them can grow tax-free. 2. You can hold shares or investment funds in an ISA. ISAs can be ready-made, where the provider chooses the assets for you and manages them to boost performance, or self-select, where you choose the investments. Pensions. 1. Your investments grow free from tax. 2. The government tops up your pension contributions in the form of tax relief. 3. If you are employed, your company will be paying into your workplace pension too, and may match any increased contributions from you. 4. Pensions can be invested in lots of different types of assets, and again they can be self-selected or chosen for you. 5. They can also be managed by experts or on a DIY basis. 6. You cannot make withdrawals from your pension until you are at least 55, so you should avoid putting money into your retirement fund that you might need before this. 2. Consider the types of investments. Whether you are using a tax-efficient wrapper or another type of investment fund, you need to consider what assets you want in your portfolio. Here are some types of investments to consider. Stock market. 1. Investing in the stock market means taking a stake in companies. 2. The value of your stakes, the share price, goes up and down depending on factors such as how well the companies and the wider economy are performing. 3. You can buy and sell your shares at any time. 4. You may also get a cash income from companies that pay dividends to their shareholders. 5. Investing in individual companies can be more volatile and riskier. Funds. 1. Investment funds have a mixture of different shares in them, either chosen by an expert manager or designed to track the performance of a specific section of the stock market. 2. They can dilute the risk of investing in the stock markets by spreading your money out across different companies, industries and countries. 3. Funds include exchange-traded funds bought and sold on the stock market. 3. These track the performance of an index such as the FTSE 100 index of the biggest companies listed on the London Stock Exchange. 4. They also include investment trusts where you invest in a pool of companies. 4. These are also listed on the stock exchange. Is Bitcoin a good investment choice for £1,000? While there is a lot of hype about cryptocurrencies such as Bitcoin, the truth is that these are highly volatile investments. While you might make a great deal of money, the price of cryptocurrency moves very fast, so there is no guarantee that you will be investing at an opportune time, and you could lose all of your money. How to invest £1,000 in the UK with minimum risk. Investing always carries a risk. The value of your investments can go down as well as up. What is important is that you understand the level of risk in your asset choices and that this matches your financial circumstances and objectives. You can also take mitigating steps such as making sure your portfolio is well diversified. If in doubt, you should seek advice from a professional. How can I invest £1,000 fast? It is important to take time understanding your risk tolerance, investment timeframe, financial goals and how much you could afford to lose before taking the plunge. That said, investment platforms allow you to invest money almost instantly by transferring money from your bank account to the platform electronically. Some points about investment platforms. 1. Low cost, simple option. 2. They can help you pick the right investments without you having to spend too much money on expert advice. 3. The platform's website or app will ask you some questions, show you a suitable investment portfolio, and invest your cash for you. 4. Platforms usually let you invest in both ISAs and pensions. How much can I earn investing £1,000? The returns from investing £1,000 vary hugely depending on your time frame and the level of risk you are prepared to take. But the most recent edition of Barclays Equity Gilt Study, which looks at returns on different types of investment from 1899 onwards, suggests 1. It suggests that British stocks have returned around 5% a year in real terms. 2. Compare this to less than 1% returns for cash over the same period. Did you enjoy the journey? Did the spells resonate with you? We want to hear from you. Leave your thoughts and questions in the comments below. And if you haven't done so already, hit that subscribe button. Be part of our Wizard community, never miss a spell, and let's continue to conquer the world of investments together. This has been The Wizard of Investment, your guide to financial wizardry. Thank you for watching, and as always, may your investments prosper.